Greetings, great Hof learners. My name is Mr. Simbi, and welcome to the very last accounting lesson for the year 2024. It has been an exciting year. We have had so many lessons. We've learned a lot, and we're already done with paper one. So that means today I'm here for paper two. I know you have your calculators ready. You've been waiting for this lesson because you want to do the best in tomorrow's paper. And I know you're going to do very well in tomorrow's paper. So make sure you have somewhere to write. Make sure your calculator is on. Make sure you have a good pen that you can use in today's class. And then we're going to go through some activities in today's class. Okay, let's begin. Here are my objectives in today's lesson. I'm going to talk to the structure of paper 2. And then my first topic that I'm going to look at is the bank reconciliation statement. And then I'm going to do debtors reconciliation. And then I'm going to do inventory valuation. I'll also look at cost accounting, budgeting, and when time permits, I'll make sure that I also look at VAT. All right, so your topics for paper 2 are as follows. You're going to look at cost accounting, which can take between 55 marks, plus minus 55 marks. And you also have your inventory valuation, which is plus minus 35 marks, depending on the examiner. All right. And then budgeting as well. You have your reconciliations, you have your VAT, and your tangible assets. Okay. So some are saying because tangible assets were tested in paper 1, well, you will also need to have your problem solving questions. All right, so before we go to next slide, we're going to take a quick 1-minute break, and I'll see you guys shortly.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinanga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you are gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
All right, welcome back, guys. All right. Here's something that I want to point out, that if you look at your cost accounting, your inventory valuation, and your budgeting, these topics have been assessed in any examination when you look at the past exam papers. And I think even when you look at your prelim papers for the year 2024, you will see some of these topics. So it is very important that before you go and write tomorrow, make sure that you do know these topics very well. All right. And then let's look at reconciliations to begin with. Let's look at the reconciliations. So as I said, we're going to do the bank reconciliation today in today's class. But we will also encourage you that you need to do your debtors reconciliation as well as your creditors reconciliation. So I would encourage you to do all your 3 reconciliations. Now, when you look at your debtors reconciliation, you have the one that is the debtors control and the debtors list. And then we will also see, when time permits, that we also look at the debtors age analysis. But if I do not do the debtors age analysis in today's class, I want to encourage you to go and do it on your own. All right. And then it is very important to note that the examiner can test these 2 in an exam. And then we have the creditors control versus the creditors list. And then the second version is the creditors ledger versus the creditors statement. Okay, so in today's class, I will not do the creditors reconciliation due to time, but I want to encourage you that after today's class, go and sit and prepare on your creditors reconciliation. All right, so to begin, let's start with the June 2023 paper, and we're going to start off with the bank reconciliation. So I would encourage you to have your calculators ready so that we can do some calculations over here. All right, so very important that when you read your question paper together with the answer book so that you really understand what the examiner has given you and how you need to present that information. Remember, in accounting, it is all about presentation. You need to present the information in a readable and in a proper way. So it is very important that you read the question paper together with the answer book. And here we're told the information was extracted from the records of the business for April 2023. Violet uses the official bank statement, which is available on the 25th of each month. That's a very important date. All right, to complete the monthly reconciliation process. She also uses her EFT transaction records, all right, renumbered to complete the journals, that is the CPJ. And this is what we're required to do. Update on the cash journals, that is your CRJ and your CPJ, and then to calculate the correct bank balance and prepare the bank reconciliation statement. Now, you'll find that in different papers, the examiner can bring it in very different ways. At times, the examiner can combine these two into one, whereby you have one box and you just do your bank account at one go. That is, you do your CRJ and your CPJ in that one box. So at times the examiner can combine this into one question, and then the bank reconciliation statement can be prepared separately. So it is very important that you expose yourself to such questions as well, and they can be tested separately as well. Okay, so we are going to do this activity and we'll see if we can complete it together in good time. Very important that when you are given your previous month's bank reconciliation statement, you read it and you understand it. Okay, you read it and you understand it. And then here is additional information and we are to prepare it here. But as I do this, it is very important that you know your keys. So I'm going to give you two keys at the moment. I'm going to give you what we call keys to the bank reconciliation. Are you guys ready? Let's start with key number one. Key number one is if an item or a transaction is recorded in the journals, that is, it is recorded by us. If a transaction is recorded in the journals by us, and then that transaction is not on the bank statement by them, the bank, not on the bank statement, that simply means we will enter the transaction in the bank reconciliation statement. That's key number one. Key number two is if a transaction is on the bank statement, that is, they have recorded it, but that transaction is not in the journals by us, it therefore means we must bring it into the journals. I'll give you key number three as I continue. There is a third key that I'll give you. So I'm going to give you that one as we continue. Okay. Now, very important that you read your information and understand it properly and very well. So let's begin. The outstanding deposit on 18 March appeared on the April 2023 bank statement. So what we see is that on the March 2023 BRS, we have this outstanding deposit on 18 March for 23,600. Why was it in there? We know that for us to record an item in the BRS, it will be in the journals, but not on the bank statement. Hence, we put it in the BRS. So it means if I see it on the BRS, it means it was in the journals, but not on the bank statement. Now, if we're told that that item or that amount now appears on the bank statement, it means now I have a transaction that appears on the BRS and it was on the BRS. Once it is on the BRS, it means it is in the journals, but was not on the bank statement. So it means it is now on the BRS. It was on the journals, but was not on the bank statement here. Okay, so remember, it will only be on the BRS because it was not on the bank statement. Now, the fact that it now appears on the bank statement, what do? You will see that with this transaction, we do nothing. We simply come and we take it, that we were looking for it, and now we have found it. So we come to this transaction on the 18th of March, and then we say it was in the previous BRS, and now it appears on the bank statement. So we simply come and we put a line across so that we know that we have treated that one. Let's go to the next one. The next one then reads, the deposit on 28 March appeared as 22,200. So here's the deposit on 28 March. They say it appeared as 22,200. An investigation then revealed that the cashier has disappeared with the outstanding amount. It was decided to write off the outstanding amount. Okay, let's backtrack a bit and understand this properly well. Why was this deposit in the BRS? It was in the BRS because it was in the journal. Which journal? Remember, it is a deposit. Which journal? That means it was in the CRJ. This deposit was in the CRJ. But that deposit, how much was it in the CRJ? It appeared as 37,200. It appeared as 37,200 in the CRJ. And it was not on the bank statement. Now, hence, we had it in the BRS. That is why we see it in the BRS over here. Now, we are being told that that deposit now appears now on the bank statement, but it appears as 22,200. So I'm going to come here and I'm now going to say it now appears as 22.2. And then we have done an investigation which revealed that the cashier has disappeared with the outstanding amount. It was decided to write off the outstanding amount. Now, how much are we going to write off? It simply means we are taking the amount that was in the journal, in the CRJ, that is my 37.2 here. Let's see if my adding machine is close. There it is. So I'll say my 37,200, and then I subtract my 22,200, and then I end up with 15,000. So the difference here is 15,000. I'm going to have it here. So that 15,000 was decided that we must write it off. Now, we have an amount in a journal. Which journal? CRJ. And in the CRJ, we recorded 37.2. But we've realized that the 15,000 of that 37.2 cannot be recovered anymore. So that means we need to reduce that 37.2 in the CRJ. And the only way to reduce that amount is by recording it into the CPJ. So we come into the CPJ, hence we end up here with 15,000 over there. We good? Thank you. Now let's go to the next one. So I come here and I draw a line again. Very key, very important. It reads, both the EFTs were on the April bank statement. Both the EFTs. So remember, we have two EFTs. Can I ask you a question again? Why were the EFTs on the BRS? It is because they were in the journals, but were never on the bank statement. Hence, we had put them in the BRS. You guys are correct. Now, we are being told now that these EFTs have now appeared on the statement. Okay? Now, EFT 768 appeared with the correct amount of 4580. Let's backtrack again. Why was that EFT on the BRS? It is because we had recorded in the journal. All right, in the journal. Which journal do we record EFTs? The CPJ. In the CPJ. How much was in the CPJ for EFT 768? We know it by what is in the BRS. So it was 5480. That is what we had recorded in the CPJ. Now, it has now appeared on the bank statement now, but it appears with the correct amount. With the correct amount. And the correct amount is 4580. So this is the right amount, which therefore means the incorrect amount is the amount in the journals, in the CPJ. We recorded more in the CPJ. How much? There is the adding machine again. So we say 5480. Then we subtract 4580. And that gives me 900 rands. So my CPJ is more by 900. And you guys know that once one journal is more, you correct it by putting the difference in the opposite journal. That means I come to my CRJ here and I record my 900 over here. Are we good? Thank you. So I record my 900 in the CRJ because my CPJ was overstated. Okay, once we are done with these ones, very important that this favorable balance, SB Bank account, we are going to record it as we are continuing. Okay, let's see. There we record it now. So this balance here, it's a favorable balance, SB Bank account. I know that in my bank account, on the debit side, that is my favorable. On the credit side, that is my unfavorable. So if I'm given a favorable balance, I'm going to come here and I'm going to say balance brought down. How much is that? 49,720. A favorable balance. Remember, we've done these ones already. So, and we're told both EFTs were on the April statement. So these ones have also appeared. Can I go on? Thank you. Let's do that. Let's go on to the next aspect. There it is. Okay, so we are told information on the April 2023 bank statement. None of these items appeared in the April cash journals. And then we have additional information. And here I have my journals here. Okay. Let's begin then. Let's start with the first one. We have a debit order here from Brilet Municipality, 2,880. And we're told the debit order to Brilet Municipality was for water and electricity. So I'm going to come here and I'm going to say my debit order is for water and electricity. It goes to my CPJ. So I'm going to come here and I'm going to say 2,880. As simple as that. Can I go to the next one? Okay, let's do the next one. It says, why Marigold, the tenant, deposited the monthly rent. So we see here, here's a deposit from Y Marigold. That is 8,400. So if it is a deposit, I know it goes to my CRJ. So I'm coming here and I'm going to say 8,400 in my CRJ. 8,400. Can I go on to the next one? Okay, so far I've done this two and I've done that one. Very important when you do your bank reconciliation. Whatever you have dealt with, tick it so that you know I've passed through here. Let's go to the third bullet. The deposit from Bentley Microloans did not relate to the business. Okay, here's Bentley Microloans here. The bank was informed of this error. So here is a deposit of 65,000. And that deposit does not relate to the business. So this is an error by the bank. So we're going to correct this in the BRS. So I'm going to do that in the next slide. So just hold on to this one. I'm going to correct it in the BRS. Let's go to the next one. The cash withdrawal of 740 was for the fuel for the owner's vehicle. There is the cash withdrawal here, 740. This is for the owner's vehicle. So that's drawing. So we're going to come here. It's going to be how much? 740 in the CPJ. 740 in the CPJ. Can I go on to the next one? It says, so I've done this one. The EFT transaction fees were duplicated on the bank statement in error. Okay, so we have EFT transaction fees here. So we're talking bank charges. Let me go and see if we have any bank charges. So we have cash handling fees here. That's number one. And then let's go and see EF2 transaction fees. So these are the ones that were duplicated. These are the ones that were duplicated. So one of them is right and one of them is wrong. The right one, we're going to take it and we bring it into the CPJ. So that means I'm going to come here and I'm going to say the correct one is how much? 220. So I can come here and I will say my 360, this one, plus my 220. Someone would have just recorded their 580. Someone would have just recorded their 580 here. That would still be correct. Okay, now this one here, it's an error by the bank. They have duplicated in error. All right, this is in error. Duplicated in error. So we need to correct this. But when you see it in an exam, don't always assume that a duplication is an error, because it can be a situation whereby in the previous month of March, the debit order was to go, but there was not enough funds. So in the current month, then they duplicate. I've seen a transaction like that, whereby a debit order could not go through in the previous month because the company had insufficient funds. Then in the current month, then they duplicated. That is not an error on the part of the bank. But in this case, it is an error. So when you see a duplication, don't always assume it's an error. All right. Another one can be because they could not debit the account in the previous month. So they would debit it twice in the current month. So when you see that duplication, please check, is it an error or it is because they could not debit it in the previous month, so they debit it in this current month. But in this case, it was an error. Okay, so I have ticked all the ones that I've touched, and I think the one that I've not ticked is this investment matured here. So when an investment has matured, we are receiving the cash. So we come to our CRJ, and I'm going to say 18,300 over there like that. And I think I've touched everything except these two errors, which must then go to my bank reconciliation statement. Okay, let's quickly take them now to the bank reconciliation statement. So remember, here's my first error. Okay, and my second error over there. Format. You have to know your format. Some of you might be doing the one column bank reconciliation statement. Some of you might be doing the double column. Please stick to what your teacher has taught you in class. But in this lesson, I'm going to do the double column. So in the double column, here's my format. I'll begin it with balance as per bank statement. I'll begin it with balance as per bank statement. And I'll end it with balance as per bank account. So if it begins with balance as per bank statement, it ends off with balance as per bank account. And now, our account was debited, we have a deposit. That means our account was credited. We have a deposit that was recorded in our books. That means our account was credited in error. So once an account is credited in error, to correct that, we are going to come and then we debit. So I'm going to come and say debit amount incorrectly credited. Amount incorrectly credited. Or you can simply say correction of error, knowing that when they deposited the amount, they credited our account. So to correct that, we're then going to debit. Hence you come here and you're going to have your 65,000 there, like that. But with this one here, the EFT transaction fees, they debited our account twice. And once the account is debited in error, now we're going to credit the amount that was incorrectly debited. We credit the amount that was incorrectly debited. And we're crediting how much? 360. Like that there. Okay, so we have touched those transactions now. Let's go to the next part of the bank reconciliation. We have deposits. Remember, we already have our format by now, and we have established that we begin with balance as per bank statement. Balance is per bank statement. And then we know that once we have deposits, we credit. So I'll come here, then I'll say credit outstanding deposits. Credit outstanding deposits. We credit our outstanding deposits. And how much are these deposits? 22,500. So I'll come here and I have my 22,500. I've seen questions whereby the outstanding deposits are more than one. So don't always assume that your outstanding deposit will be a single one. I've seen questions where there is more than one outstanding deposit. And then we have outstanding EFTs. And we know that we debit outstanding EFTs. So I'm going to come here and I'm going to say debit outstanding EFTs. All right. And then I have their numbers here. The first one is 883. So EFT 883. How much is that? 9,520, 9520. And I have the next EFT, which is EFT 884. And that is for 12,530. 12,530. Why am I recording this? Because I've been told these items, the cash journals reflected the following entries. So these entries were in the cash journals, but did not appear on the bank statement. Hence, we put them in the BRS. Okay. Let's come now. That is our updated cash journal. Very important that when you add, don't forget to add these amounts. Most of you make that mistake where you just start adding your 900 going down and you end up with the wrong figure here. Okay, so please remember to add the totals. Always add from the totals. And once you've done that, then you can bring your amounts to the bank account. Remember, on the debit side, it's a plus. On the credit side, that's your minus. So you're going to come here and you're going to say total receipts now. Total receipts, remember that's from your CRJ. And your total receipts are these ones, 143,200. So I'm coming here, that's 143,200. And here you're going to get your total payments. That's from the CPJ. And the total payments are these ones. And how much is that? 237,000. So you're going to come here and say 237,000 over there, like that. And then you're going to get your total now down here. So you're going to add which side is bigger. Which side is bigger? I think you can see here that your credit side is bigger. So you're going to end up here with 237,000 over here. All right, 237 there. And then here it's 237,000. Let's see if we can get that balance there. So we're saying 237,000 over there. Then you say minus 49,720. 49,720. Then minus again 143,200. Minus 143,200. And that's going to give you 44,080. So I'm going to have here my balance carry down. That's 44,080. 44,080, which becomes my balance brought down here, 44,080. I did a ledger account just to show you how you can do it. But there's also the sentence approach. Please stick to what you have been taught in class. The method that you understand the best is the one you must use tomorrow. Okay, it's about getting as much marks as possible. And then we can then come and complete our bank reconciliation statement, whereby, remember, we had this amount and we had already recorded these ones together with the correction of errors. And then the balance as per bank account, it was a credit balance. So we bring it here. And then we look again for the side with the highest amount, which is the debit. And then if we add, we get the 87,050, have the same amount on both sides. Then you say the 87,050 minus the 22,500 minus the 360 and the 44,080. Then you get your balance as per bank statement, which is 20,110. That is how you would then complete your bank reconciliation statement. Very important that you prepare your internal control measures on the bank reconciliation. Internal control measures for cash. Please go through them. Very, very key that you know those internal controls. I'm going to move on to the next question now, which is an extract from the NSC November for the year 2023. Remember, we had paper 2, so I am going to start the debtors reconciliation. Let's begin. And it reads, Zigzag Traders. They sell ladies' bag or ladies' clothing on credit. Debtors are allowed a credit term of 30 days to settle their accounts. Okay. Required. Provide 2 documents that Zigzag Traders will need from potential debtors before they allow them to open accounts. So this is information, I think you did this in grade 10 or grade 11. All right. What should a debtor provide in order for you to sell goods to them on credit? Okay, so I'm going to move on to the next one, 1.2. Refer to information A and B, and then we're going to do the reconciliation here. Okay, let's see what more information we're given. So we're given the debtors control account balance, which is 228,000, and then here we have our debtors, which is Barnes, Davis, and Foley. All right, and then here is the errors and omissions that must be considered, and then we begin with the first one, and then there we have our debtors control, and here we have the debtors list. I've seen in some exam papers where they can ask you the debtors reconciliation but not give you both the debtors control and the debtors list. At times you can just be given the debtors list alone. At times you can be given the debtors control alone, or you can be given both, as we see here, where you have the debtors control and the debtors list. I would advise you that you do all of them, even when you get again to the creditors reconciliation. Please ensure that you study all these reconciliations so that if any of them comes, you will be very well prepared. Let's go now. So for you to understand reconciliation, you have to know your source documents and the signs that are related to the source documents. So when we read our source documents, we're going to read them together with their signs. Okay, with their signs. Let's go. It says, an invoice, in my mind I know an invoice is a plus. Let's go. An invoice for 1,750 issued to A Barnes was not recorded in the books of Zigzag Traders. The moment an invoice is not recorded in the books of a business, it will not appear in the control. It will also not appear in the list. Therefore, you must record it everywhere. So I'm going to come first to the debtors control. And I'm going to say in the debtors control, remember, an invoice is a plus. So I'm going to come here and I'm going to say plus 1,750. Signs are very important. Signs are very important. And then I come here. To whom did we sell the goods to? A Barnes. So I come to A Barnes and I'm going to say plus 1,750. We good? Okay, let's go on to the next one then. Let's move on to the next one. Number 2. And it reads, a direct deposit of 2,500 by E. Foley was correctly recorded in the journal, but incorrectly posted to the account of E. Fogs, another debtor in the debtor's ledger. Source documents and signs. If it's a direct deposit, it means it's a payment. It's money coming in, CRJ. All right. So it is a direct deposit by E. Foley. E. Foley is a debtor. So we've received money from a debtor. The sign thereof is a minus. Okay, a minus. Was correctly recorded in the journal. So once we are told that it was correctly recorded in the journal, that means my control is sharp. So my control is okay here because the journal was correctly done. But it was incorrectly posted it was incorrectly posted to the account of eFogs. So here the mistake is in the names. In the names. So if the mistake is in the names, it means it does not affect the control, but it affects the list. We got to where we find the names and we correct it. So we know it is an EFT or a payment that was done, a direct deposit by eFolly. So the payment was done by eFolly, but it was recorded into eFogs. So we don't have eFogs here. We just have to come to eFolly. Then we say minus 2,500, like that. Minus 2.5. eFolly has paid us. eFolly has paid us. Can I move on? Let's go. Number 3. The total of the debtors journal. The total. The keywords. The total. The total of the debtors journal. So I know that in the debtors journal, I record my sales, which is a plus. Okay? Sales, that increases the amount that my debtors owe me. The total of the DJ, 62.5, was incorrectly recorded as 65.2. So I overstated an amount that is in the debtors control account. So already we know the error is in the debtors control account. Let's see how much is the difference. Okay. So if I bring my adding machine here, I'm going to say 65.2 minus 62.5. And then the difference is 2,700. Okay. So we overstated by 2,700. In other words, we added 2,700 more because from the DJ we are adding. So we added 2,700 more. That is in the control. To correct that, then we simply come, then we say minus 2,700, like that, because we added 2,700 more. So we simply subtracted. As simple as that. Okay, can I move on? Let's do that. Number 4. It reads, merchandise sold to C. Davis, 3.5, was treated as a return of goods and recorded in the DAJ. Okay, let's read it again. Merchandise sold. Once merchandise is sold, it must be recorded in the DJ, and the sign is a plus. But it was treated as a return. A return is a minus, recorded in the DAJ. So there's an amount that we should have added, but rather we subtracted it. That's what they're telling us. All right, and it was 3,500. It was recorded in the debtors allowances journal. Now you have to understand that we post from the journals to the control, and we post from the journals to the ledger, the list. So that simply means once we make an error in the journal, that error is going to affect the control as well as the list. So we need to correct it everywhere in this case. Now, to do that, you have to understand that when an amount is recorded with the wrong sign, you must now record it with the correct sign. But how many times? Twice. So it simply means I have to come and add the 3.5 twice. So when I come here, I'm going to say plus 3.5 plus 3.5. Someone is saying, Mr. Simpi, why didn't you just say plus 7,000? Okay, plus 7,000. Where else do I go? Who is this? C. Davis. So I come to C. Davis. What do I say? Oh, now you want me to say plus 7,000. Okay, so I just come in and say plus 7,000. Plus 7,000, like that. Remember, once an amount is recorded with the wrong sign, we correct it first, then we do the right recording. So we double the amount. Okay. Can I move on to the next one? Thank you. 5,200 received from declaim. Received. The 5.2 is received from declaim. A debtor whose outstanding balance was written off 6 months ago. was recorded in the CRJ as a receipt from a debtor. Okay. So we received 5.2. When we receive money, we know we recorded in the CRJ. Okay. So we received this from D. Klein. And you can see D. Klein is not part of our debtors here. He was a debtor that was written off. So once a debt has been written off and the amount is then recovered, it will affect two accounts, which is your bank and your bad debts recovered. But these people recorded it as money received from a debtor. That is incorrect. So it simply means the 5.2 then was posted from the CRJ to the debtor's control, because it will not affect the list, because we don't have any decline in our list. So the only place it can affect is the control. That when we posted the debtor's control amount from the CRJ, that amount was overstated. In other words, we subtracted more by 5,200. To correct that, we simply come and then we add the 5,200 back. Like that. We add it back. Okay. Can I go on? Let's do that. All right, the next one. Merchandise retained by A Bonds was recorded in the relevant journal as 250 instead of 700 and posted accordingly. Okay, so if merchandise is returned, do you know it's a decrease, it's a minus, all right? And it's A Bonds, don't forget that. It was recorded in the relevant journal as 250. So when we went to record in our DAJ, we recorded 250. All right, so we are making an error in the journal. That means posting to the control is going to be in error. Posting to the list is also going to be in error. How much is that difference? The difference is 700 minus 250. Okay, so let's come here and say 700 minus the 250. That is 450. Okay, so it simply means, remember, it's merchandise returned in the relevant journal as 250 instead of 700. So we posted 250 instead of 700. In other words, we subtracted, remember it's returns. Returns go with a minus. We subtracted less. We subtracted 250 instead of 700. So we must go and subtract another 450 minus 450. And then we come to who? A Bonds. We come to A Bonds minus 450. Okay, let's go. And then we come here and then we read the next one now. An EFT for 7,850 received from eFolly as part payment of his account was entered correctly in the relevant journal, but no entries were made in the debtor's ledger. So obviously this is not going to affect your control. Remember now, very key, that there's certain question papers that come that whenever there is no effect, no entry, you must either write no entry or put a 0. If you leave it blank, you lose a mark. You have to record something, either no entry or a 0. Don't leave it blank. Read the instructions carefully. Okay, show with a plus, a minus, or no entry. So if there's no entry, please write no entry, or others will say put a 0. So if it's an EFT received from eFolly as part payment of his account and was entered correctly in the relevant journal, so the control is fine, but no entries were made in the debtor's ledger. EFT, that's a minus. So it's an amount that we must minus in eFolly. So we come to eFolly minus 7,850, like that. That concludes our debtors reconciliation. Now, very, very key that you go and do your debtors age analysis. Okay, please take time to sit and do your debtors age analysis, where you look at the compliance of debtors to credit terms, and as well as your credit limits. And when you answer these questions, remember to quote figures. Please remember to quote figures. Identify problematic debtors and have solutions on what to do with those particular debtors. So remember to do your debtors age analysis. Okay, can I move on? All right, let me do that. From the NEC June 2023 paper, I'm going to start now doing an activity 3. This is now on cost accounting. All right, let us go. Ledu manufacturers, it says, the business manufacturers leather purses. The financial year ended on 28 February. So in this particular question, we're doing the factory overhead cost and the production cost statement. Okay, and here's the information A that was given. Very, very important to note that when you are given information, when you're reading through, please check if the information you're given is already recorded. If it's not, like your work in progress at the beginning here, then you put it in. That's a free mark that will be given for you. Okay, and then you have to know that when you're completing your production cost statement, there are times when you do it from the top to the bottom, and there are times you complete from the bottom going all the way up, depending on how the examiner is going to test this particular topic. Okay, so in this question, we are going to do calculation on direct labor cost. I've seen there are questions whereby calculations can be on the direct labor cost, and you have such calculations where you have the number of employees and then you have the rate per hour, or you can be given an adjustment with the net salary and then the deductions, and then you have to calculate going back to the gross. It is very important that when you are dealing with your direct labor cost, know that you record your gross plus contributions. So in whatever amount you are given, strive to get the gross and add the contributions. That is what would appear. But in this case, we're given a different adjustment. Okay, so let me look at this one. It says the number of workers, it is 40. So we have 40 people here working. And then we are told that the basic normal rate is 40 rands. So 60 rands rather. I have my 60 rands there. And then let's see if we punch that in the calculator. I prefer doing it bit by bit. So it's 40 times the 60. That gives me 2,400. So here I have 2,400 here. And then we're told the normal time hours worked, it's 1,920. So I multiply this by 1,920 like that. So I'm going to say times 1,920. And then we get our 4,608,000. So we get our 4 million. So I'm going to come here, then I'm going to say direct labor cost, which is my 4,608,000. 4,608,000. And then I'm given overtime. So I'm going to come and add my overtime plus the 1,142,000 over there. I close my bracket. If I add that and that should give me my 5,750,000. And then the question is, how do I get my direct material cost? How do I get my direct material cost? Okay, what I've seen, even with the current prelims, I've gone through quite a number of prelim papers for the year 2024. I've seen certain papers, very interesting, whereby when you're calculating your direct material cost, you can be using the same method as we're going to use here, where you simply get the difference between your prime cost and your direct labor cost. So you're simply saying the 12.5 million, we're simply saying your 12.5 million, your 12.5 million minus your direct labor cost, 5,750,000, like that. And then that is going to give you 6,750,000. That becomes your direct material cost, 6,750,000. I've seen papers that have tested it this way. I've also seen papers that give you the opening stock of your direct materials, and then you are given the purchases, you are given the returns, you are given trade discount that must be subtracted, and then you are given closing stock. Or you are not given the closing stock, and then you are given an inventory valuation method. You can be given your FIFO or your weighted average. So it simply means your inventory valuation methods can be integrated into your cost accounting. That's a huge possibility. I think you've seen it in some prelim papers where your inventory valuation methods have been integrated into your cost accounting. So I've seen questions like that, and then you then calculate your direct material cost, and then you place it into your production cost statement. So I want to encourage you in the remaining few hours, just make sure you get one or two questions that are in line with that will assist you. Okay, so let's go on to the next one then. And then we now want factory overheads. On factory overheads, I've also looked at a number of papers, quite a number. I've seen different ways in which the factory overheads can be tested. All right, so there's two ways that I want to talk about. Number one, where you are given the factory overhead cost, but you have an incorrect amount. Okay, so you have an incorrect amount. In other words, there are errors as well as omissions that must be taken into account. That's number one. Number two option is when you're just given a blank factory overhead cost note, and then you are preparing it from start. You are not correcting anything. You're just preparing it. So make sure you expose yourself to these two, because they are different. The one with errors, you're correcting the errors and omissions. But the one where you're preparing it from scratch, you're taking the information and you're placing it correctly. So make sure you do these two, because they are different in how you treat the adjustments. In this one, we have errors. Let's deal with the errors then. It reads, insurance is a fixed monthly premium for the entire financial year. The amount paid, which is 235,950, includes the premium for March. We know that our financial year ends in February. So I'm coming here and I'm going to say insurance, and I'm opening my bracket. Very key. When you do your factory overheads, please open your bracket. Don't do calculations on the calculator. Calculators are never marked at the end of the year. Make sure your calculations are on the answer book. Open brackets. So you take your 235,000, okay? You have your 235,000 here, 950, 235, 950 over there. And we are told that this amount includes a premium for March. That means it is the normal 12 months from March to February plus the March. That means we're dealing with 13 months. But we want 12 months. So you come here, you multiply by 12 over 13. We want the 12 months. So I'm going to come here. Let's see if we can have our adding machine. Then we're going to say 235, 950. Then we multiply by 2/3. By 2/3, like that. And then that's going to give me 157,300. Okay. So let's read it again. They say, oh no, 12 over 13, 12 over 13. Okay, so I punched in the wrong way here. I put the 2/3. So here we want the 12 over 13. So here it's supposed to be the 12 over 13 here. All right, it's supposed to be 12 over 13. 12 over 13. Thank you. Thank you. Someone was saying, Mr. Simbi, you jumped on to the next part. So we wanted to get the 12 over 13 first, and that is going to give me 217,000. So I come here, then I get my 217,800. 217,800. And then that 217,800, then I then say 2/3 of this expense relate to the factory. Then I get my 2/3. So what is very important here is adjust for your prepayment and your accrual first before you can allocate according to either floor space or the ratio that would have been given. First, you adjust for your accrual or your prepayment. If you are prepaid, like in this case, we only want the 12 over the 13 months. And then once you get the 217,800, then you can allocate as 2/3 of this expense relates to the factory. So I'm going to come again, and then I'll say the 217,800, then I say multiply by 2/3. All right, and then that's going to give me 145,200. So I come here, that's 145,200. Okay, thank you. Let's move on to the next one. Here's the next one. The bookkeeper calculated the factory overhead cost at 2 million. Remember, we have that one here. Water and electricity allocated to the office was 69,200. Note that water and electricity is shared according to the spaces as follows, which is this one here. All right, so we're coming here and we're going to say water and our electricity. I open my bracket. The water and electricity allocated to the office. To the office. Very, very important. And in the office, it's 160 square meters. That is what is in the office. So what we want is for the factory. And for the factory, it is 560 square meters. So we use the UK method, others call it the Cremora method, what you want over what you have. So I'm going to come here and I'm going to say, what I want is the 560. That is what I want. I want the 560. I want the 560. And what I have is, I'm told here, office. Here's the office. I have the 160. 560 over 160. Multiply that by 69,200. Okay, so this is a popular adjustment for most examiners. All right, it's very important that you prepare on such adjustments. 560, that is what we want. We have 160, and then we multiply that by 69,200. Okay, and then that is going to give us 242,200. 242,200. Okay, 242,200. Let's go on to the next adjustment. Rent of 316,000 was recorded in the factory overhead cost. However, the bookkeeper used incorrect ratio of 2:5:1 for the factory. So the factory is getting 2, the sales is getting 5, and the office is getting 1. That is the administration department. The correct ratio should have been the factory 5, the sales 2, and the admin 1. Okay, so the factory, the sales, and the admin. Now, when we come here, we're going to say rent now. Rent, we open the bracket. We know that once there is an error, the easiest way, take out the error. So come in, then I'll say minus 316,000. I've taken out the error. So take out the error first. Take out the error. Then calculate how much is the correct amount. So in order for us to know how much it was before it was allocated to the factory, we know that this 316,000 is 2 parts of 8. It is 2 parts of 8 for us to get the 316. So if 316 is 2 parts of 8, if we want the 8 parts, we simply say 8 over 2 multiply by the 316,000. Like that. So let's have our calculator again, and we're going to say over here, it's going to be 8 over 2. All right. And then we multiply that by 316,000, like that, 316,000. And that is going to give me my 1,264,000. So here I end up with 1,264,000, like that. Are we still okay? Then I take that 1,264,000 now, and then I say 1,264,000, and then I apportion it in the right way now, where I now want 5/8. All right, so I'm going to come again and I'm going to say that 1,264, multiply that by 5/8, and that's going to give me 790. So I'll come and then I'll say plus 790,000, and I close the bracket, and I close that bracket. So if I come here, I'm now going to say, I'm going to start here with a negative 316 minus 316,000 plus 790,000. That is going to give me my amount, which is 474,000. So I'll come here, it's 474,000. This, remember, was an error. So we took out the error and we recorded the right amount, and that becomes the net effect. And you can see it's a positive amount, hence I'm going to be adding that particular amount. Okay, let's go on now to complete the production cost statement. So the way in which this one was to be completed was using the units here at the bottom, where you take your units, which is your 33,500 units, and you multiply that by the cost per unit. All right, so if you do that, where you take your 33,500 and you multiply that by 475, and that's gonna give you 15,912,500, 15,912,500, and then you can then complete your production cost statement. Remember, we have this one, and we have already done that one, and with our prime cost, factory overhead, we closed it up, and then we get total manufacturing cost. So remember, from the top we're going down, and then we had work in progress at the beginning, which therefore gives us 16,542, and we had the 15 million here. So to get this work in process at the beginning, you simply say your 16 million minus your 15 million here, and then you get your 629,500, and your question is complete, finished. That is how you would complete your production cost statement. There are different ways in which your production cost statement can be completed. Others is when you're given your finished goods stock at the beginning, your finished goods stock at the end, and then you're given your sales, and then you have to calculate your cost of sales, and then you get a figure. Please expose yourself to all these different kinds of calculations in completing your production cost statement. Okay, so in this activity, I wanted to explain what are economies of scale. Okay, there was a question that I received during the week, and Elena was asking, what are economies of scale, Mr. Simbi? So I thought, you know what, maybe it could be a number of other kids that are asking this particular question. Let's try and explain it a bit further. So what I have here is an extract from the NSC November 2022, and here's the question. It says, Annie wants to improve her profit by 50,000. Okay, so I'm going to explain the economies of scale in the next activity. Here, I'm going to do the profit calculation. Okay, so I'm going to do the economies of scale in the next activity. But here, it is to calculate the improvement in profit. It reads, Annie wants to improve her profit by 50,000 rands during the next financial year while maintaining cost. Calculate the additional units that must be produced to achieve this target. Okay, so it is very important. There is a very simple way in which you can calculate this, where if you want the additional units, that she must produce, you simply say your total profit that you want to achieve, your your profit that you've targeted. Others, you would see, they would say they have a targeted profit. Others would say they have aimed at a profit. Then you divide that by your selling price per unit minus your variable cost per unit, which I know you know it's called contribution per unit, profit per unit. So if I want to achieve or to increase or to improve my profit by 50,000 rands total profit, I would therefore divide that total profit by the profit per unit to know how many units I need to get that total profit. Did you get me? I'll say it again. If I want to increase my profit by 50,000, I want to increase my profit by 50,000. But I know how much is my profit per unit after I have covered my fixed cost. After I have achieved break-even point, I've covered my fixed cost. Therefore, I can start realizing profit above break-even point. Therefore, if I know how much is profit per unit, it becomes easy. So I will simply say, how much is my selling price per unit? My selling price per unit is 375. So say 375 minus my variable cost per unit, which is 244, which is 244 over there. Okay, so once I get that one, make sure you have your calculators. Let's go again. It's 375 minus the 244. Okay, let's see how much that is gonna give us. All right, so that's gonna give you 131. So I'm just gonna come here and say my 50,000 divided by 131 over there. Okay, let's see if I have my calculator again. So it's my 50,000 divided by 131. So the number of units, it's going to be 381. Okay, you can see it as a decimal there, but you're going to round your units up. Okay, so it's 381, 381.6. Therefore, you round your units up to give you 382 units. If anyone wants to improve a profit by 50,000, she has to sell 382 units. Now, this question can be tested in very, very many different ways. You can be tested not to improve profit, but to achieve a targeted net profit. There is also what we've seen questions where they want to achieve a targeted net profit. And it is very important that you practice on these kinds of questions as you are preparing for tomorrow's paper. Okay, now let's come now to the one where I wanted to explain the economies of scale. Okay, it reads, Any is concerned that the fixed cost increased to 806,400. Okay, so you can see here your fixed cost have increased, all right, from 750 to 806,400. Explain why she should not be concerned. So we're being told already she should not be concerned, and provide 2 points. So the first point is economies of scale was achieved due to an increase in production by 1,150. What is economies of scale? In simple words, it is the advantage that we get for producing on a large scale. When we produce more units, we get to divide our total cost by more, so the cost per unit drops. That's economies of scale, the advantages of producing more. The cost gets to be shared amongst more units. Those are economies of scale, advantages of producing more. So here, we produced more units, 6,400, such that even though our total fixed cost increased, we did not feel that when it came to the cost per unit, because we had more units to divide our total fixed cost by. Hence, the cost per unit then decreased. That is what we call economies of scale. The fixed cost per unit decreased by 25 Rand from 155 to 126. 151 to 126. Okay, that is by 16.6%. Its fixed costs remain relatively stable not influenced by the level of production. Okay. The total fixed cost increased by 13,650, okay, from the 792 to the 806. That is by 1.7%, which is below the inflation rate. In most cases, the examiner will give you the inflation rate. They will say note, and then they tell you about the inflation rate. Okay, so this is what I wanted to explain, that your total fixed cost can increase, but your fixed cost per unit can actually decrease. Once the number of units produced increases, that is an advantage of producing more, economies of scale, economies of large scale production. Okay, let's now come to this other one. This one now, we have seen a change in our direct labor cost, and we want to look at the reasons that have led to that. But let's quickly go for 1 minute break, and then when we come back, we continue with this particular activity. Let's take 1 minute break, and I'll see you shortly.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinanga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back, dear learners. Remember, just before the ad break, we're on this extract from the NSC November for the year 2023. So this is just an extract. And there's a question here which reads, identify and explain two cost items with figures that may have contributed to the increase in the cost of production per unit. Okay, so we're looking here. The cost of production per unit has gone up. All right, so we want to see what could have contributed to that cost of production per unit increasing. You can see in 2022 it was 28.54, but now it has gone to 36. What could have led that? And they say, note that the inflation rate is at 7%. Number one, the reason why our cost of production per unit would have increased is because of factory overhead cost. All right, so if you look at our factory overhead cost, you can see they've increased from 11 Rand 64 to 14 Rand 20. We're talking per unit in this case. All right, so they've increased by 22%. 22% is way higher than the inflation rate of 7%. So that one already would have led to the increase in the cost of production per unit. That would be point number one, my factory overhead cost per unit. Okay, and what could have led to that? It is poor management, poor supervision on the production process, or a drop in production. That is, once production drops, therefore your cost will definitely increase. All right, so as you can see here, the number of units produced has actually dropped from 198,000 to 163,000 over there. So that is point number one. So apart from preparing the production cost statement, remember you have to do your break-even calculations as well. And then you have to do your extra profit or extra net profit calculations. And then you also have to do further analysis of your cost accounting information. As in this one, where we want to identify and explain cost items that have led to an increase in the cost per unit. And the first one was the factory overhead cost. And the second one that we're going to look at. Okay, let me go back and I'm going to show you the second one. I'm going to show you the second one. All right, here's the second one. The second one is the direct labor cost. The second one is the direct labor cost. If you look at your direct labor cost, you can see it was 6 Rand 70 per unit in 2022, but now it has increased to 11 Rand 20. So the direct labor cost per unit increased from 670 to 1120. That is by 450, which calculates to 67.2%. All right. The reason why that could have happened is because of poor supervision, or the employees are being paid excessive overtime. It could be linked to load shedding or other disruptions that may delay production, or it's because the company wanted to meet a certain target, or it can be inflationary increases in wages. All right. And then it could be poor or lack of effective training on the employees. So it is very important, dear learners, that you don't only do the production cost statement and the factory overhead. You also have to do your break-even calculations, as I've said, your extra profit calculations, and then as well as your analysis. And remember, once you calculate and you put your reasons in percentages, it gives a clear picture why there would be such an increase. So remember, we have the direct labor cost as well as the factory overhead cost. These are the two reasons why we had an increase in the cost per unit. Let me now move on to activity number 4, which is budgets. So remember, I have a lot that I need to cover today, so I'm moving a bit faster. On your budgets, here we have an extract, remember, from the NSC June for the year 2022, and we are required to calculate amounts A to D. But before even I start this, I want to remind you of your debtors collection schedule, your creditors payments schedule. Very important, these schedules. All right. And I want to remind you as well, it is important for you to know which amounts can be recorded in the cash budget, but not in the projected statement of comprehensive income, projected income statement, and which amounts can be recorded in the projected statement of comprehensive income, but not in the cash budget. It is very important that you know how to identify such items. And there are questions that do come, and you are given a table and information where you have to record amounts that go to a cash budget and amounts that will appear in the statement, in the projected statement of comprehensive income. But in this activity, we are going to do calculations that pertain to these amounts over here. So I have my A, B, C, and D. And there's the information. And let us therefore begin. So A. With A, we are calculating the rent income. And we're told rent income is expected to increase by 9% per annum, effective from 1 July. So this is July. It's going to increase here by 9%. So I know that this rent that I have here, which is my 15,500, that is my 100%. So this one is my 100%. So what they want me to get is an increase from the 100%. I add 9%, which means now it's 109%. That is what we want in A. So it therefore means what I want is 109, and what I have is 100, and I multiply that by 15,500. On my calculator, I'm now going to say 15.5, then I multiply that by my 109 over 100. All right, and then yes, and that's going to give me 16,895. So I get my 16,895. That becomes my A over there. That becomes my A. Now, At times, you may be required to calculate from the 16,895 going back to the 15.5. At times, you may be required to do that. So how do you do that? If you're given the 16,895, you know that the 16,895 is 109%. If they want to calculate the June rent, that is the rent before it has increased, how do you do that? You know that your rent before it is increased, it is 100, and the rent after it is increased is 109. Then you multiply that by 16,895. So if I'm to put that on my calculator again, I'll therefore say what I want is 100, and what I have after increase 109, and then I'll multiply that by my 16,895, and that will give me 15.5. So this is another way the examiner can test you. They can test you from the amount before increase to the increase, or they can test you from the amount after increase back to the amount before increase. So you have to know how to go forward as well as going back. All right, let's quickly go then. And then the next one. The business has negotiated a loan which will be received on the 1st of June. Interest at 13.5 per annum is payable at the end of each month, commencing on the 30th of June. What are we required to calculate? The loan. Okay, so this is under your receipts. We are required to calculate the loan. All right, so you will see that in this information, I have taken out a part of this information. If you go to your payments, that is in the cash budget, under your payments, you are given interest on loan. You are given interest on loan, and the interest on loan is your 3,150. So you have interest of 3,150, which is interest on loan. Okay, so the interest on loan, which is in the month of June, so that is going to appear under payments. Under payments, you have your interest on loan. So to get that loan there, it is very simple, because remember, you would be saying your loan times the interest of 13.5% times 1 month over the 12. That gives you the interest which I gave you, which is 3,150. Therefore, if I want to get this loan here, I'll simply say my interest per month, which is 3,150, and then I multiply it by the 12 months here, by 12, and then I divide it by the interest. All right, by the interest, which is 13.5 divided by 100, which will give you 0.135, and then that will give me the loan. So if I do that on my calculator, let's quickly do it together. So I'll say 3,150, multiply that by 12. That is going to give me 37,800. So here I'm going to have 37,800. And then I say the 37,800, and then I'm going to divide that by 0.135, and that's going to give me 280,000. So I'm dividing this by 0.135, and that is going to give me 280,000. That is the loan. The only thing that you don't see on my screen is this interest on the loan, which is on your question paper under the payments on the cash budget. Okay, let's quickly go on to the next one. But before I move on to the next one, we're just going to take again another 1 minute break just to catch our breath, and then we continue from there. So we're going to take a quick 1 minute break, and then we'll continue after the short break.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back, dear learners. Before the ad break, remember we are on budgets, and I just wanted to remind you how to do calculations going forward, going back, how to calculate the interest, how to calculate the loan. And such calculations is what we're seeing here. They can come either when the company has purchased a vehicle and their monthly installments on the vehicle. The examiner can test this in many ways. So you just have to make sure that you know how to calculate the initial amount before the interest was given. And I reminded you that you must practice your debtors collection schedule, your creditors payment schedule, and your calculations for the cash budget, as well as calculations that can affect both cash budget and projected statement of comprehensive income. I have shown you how to calculate amounts going forward and going back. Please calculate how to get percentage increase as well. Percentage increase as well as your percentage decrease. Very important that you know how to calculate your percentage increase as well as percentage decreases. All right, so after you have done this, make sure you expose yourself to quite a number of papers that have different adjustments. All right, so I'm going to now move on to activity number 5, which has to do with variance analysis. Variance analysis. And the question reads, comment and quote figures on the effectiveness of advertising. Comment and quote figures on the effectiveness of advertising. Okay, it is very important that you know that in a company, there are costs that are related to income. All right. So for us to realize particular income, there's a cost that must be incurred. In other words, that cost is incurred for us to generate particular income. So there's a relationship, there's a pairing of certain costs, such as your advertising. So whenever you look at advertising, you need to look at its effect on our sales. If we're advertising in order to increase sales. So if we're to see the effectiveness of advertising, it must be reflected in our sales. If there is no increase in our sales, that therefore means our advertising is not effective. Let's look at this one. Although the same amount, that there's no change as budgeted. You see your advertising with budgeted 35 and the actual is 35. So there is no change between the budgeted and the actual on advertising. Actual sales are less by 20%. You can see here that your budgeted advertising was 35,000 and you had budgeted sales of 882. And in your actual, your advertising remained constant, but your sales have actually declined and is now 705,600. So you see that even though your advertising has remained constant, but your sales have actually decreased by 20%. That's a significant amount. So once your sales have declined, yet your advertising has remained the same, that means your advertising is not effective. So if you just look at advertising independently, you think your advertising is okay, yet it is not okay. You had to compare it to the sales. You have to look at the effect it has on sales. Advertising remained constant, but your sales have declined. That means advertising is not effective. Okay, let me move on to the next question. Control over delivery expenses. Okay, so again, your deliveries have to be related to your sales. If we budgeted 57,330 on delivery, we were also budgeting 882,000 on sales, 882,000 on sales. And then our actual was 51,200, and that one is 705. You can see that they both decreased. If you look at it from a rand perspective, you might think that that is not significant. But if you bring in percentages, that's when you realize, okay, that your differences can be significant. Let's go and look at it. Your delivery expenses is lower than the budgeted. That is, the difference between this amount is 6,130, which is 10.7%. So the decline here in delivery, the decline in delivery is 10.7%. Okay, that is the decline in the delivery. But the decline in your sales, remember we calculated it to be 20%. So we would have expected our deliveries to have gone at the same level as our sales. If our sales decreased by 20 from the budget to the actual, we would expect our deliveries to do the same. But in this case, our deliveries only decreased by 10%, yet our sales decreased by 20%. That means there is no proper control on our delivery expenses. So we looked at the two, all right? We looked at the two. Advertising, remember we related it to sales, as well as delivery. We also related it to sales. When a question of this nature comes, you need to look at costs that speak to each other. I once saw one whereby they book their hotel rooms to guests and they have laundry costs. The laundry costs have increased more than the number of rooms that have been booked. So you have to be able to relate certain costs to another item again in the budget. In this case, we're given sales and advertising, and sales and delivery. Those are paired together. Okay. Here's another question. It says, Kyla decided that the business will purchase a delivery vehicle. Okay. So these are questions that require you now to think. All right. These are questions that might not be repeated in an exam, but it is important that you expose yourself to such questions. And the answers might be similar, but the type of question might be different. Okay. So state two benefits of this decision. So it might not be a delivery vehicle. Maybe they want to acquire a new printer, maybe new computers or new buildings. What is the advantage of acquiring new assets? Number one, it increases the value of assets. The business will own an asset, as well as deliveries can be made at convenience. So you need to look in relation to the question that you are presented with, and it will lead to possible savings in the company. And we can use this to generate income when we doing deliveries for others. So I wanted to expose you guys to these kinds of questions that as we prepare for tomorrow, you must also be able to think out of the box. Questions that can come that you might not have seen in the past exam papers, but you just have to think according to the business that you're provided with. Then you provide the appropriate responses. Okay, I'm going to move on now to activity number 6 as we are greatly behind time. Okay, on activity number 6, it says, refer to information G, budgeted and actual figures. In order to increase sales, Adam decided to change the way in which the salespeople are paid each month. The salespeople agreed to a change. Okay, so again, it is another different kind of question where you have to look at hidden information within the table that you'll be provided. Remember, you will be provided with information. You should be able to read that information and understand and be able to decode and pull out certain amounts from there. Explain the changes that Adam made. So you can see here, as you can see, there's something new here. The commission, it was not there initially. So he introduced a commission to sales staff. It might not be a commission. It might be that a company has started to deliver goods, or a company has started to sell goods online, or a company has started to do something different. So the examiner wants you to see what was not there that is now there. Are you able to pick such information on your table of information? Explain why some of the salespeople regretted their decision to agree to these changes. Quote figures to show calculations. So these questions now require you to apply practical mind to say, if you were one of the people and you have this change, why would you regret having agreed to such a decision? Then you have to compare. So you will be given information where you have to compare. Comparison is very important, where you can now compare. Here you see the fixed salary, which is what they have here, the fixed salary of 161,050 is less than the 165,000, this 165,000 here. Okay, so here they are getting here the salaries and the commission. So we're saying the 161,050 is less than the 165 which they earned previously. But you must be able to look into information and connect the dots. Don't just look at it, be able to understand the information that you be given. And this is 3,950 less than the previous month. Their contribution. So here we're now saying the work that they were doing, which led to an increase in sales, yet they are now earning less. It might not be in this line. It might be workers who have worked more hours but earning less. So you must be able again to do certain comparisons in the exam paper. Comparison is very, very important. They attracted more customers, yet they are now earning less. This is what I wanted to introduce you to in activity 6. The aspect of comparing what was there and what is now here. Are you able to apply it and see that this is what they were getting and now they're getting this? And then you give reasons and the effect. When you look at questions that want you to show the effect, please indicate the effect. And remember, we always need to show calculations and quote figures. Activity number 7. Inventory evaluation. It can never be a preparation for paper 2 without inventory valuation. Remember, I spoke about inventory valuation in cost accounting. Yes, it's possible to merge and marry these two, cost accounting and inventory valuation. But here we have an inventory valuation question. So I'm going to start with my first in, first out. Pete and Sports Shop is owned by Miloslav. The financial year ends, and calculate the value of closing stock using the first in, first out. Let's do it. So here is the information given. Before you start answering, in the reading time, there are certain things that you must be able to pick, such as, number 1, where is your opening and closing stock? Once you see where your opening and your closing stock is, it becomes easy for you. And focus on your closing stock. That's the number that we need to give value to. All right. And then carriage. Once you see carriage, that simply means I'll come here onto my unit price and I see carriage is 8. So that I don't forget, in my reading time, I read it, I understand it. Once I start writing, I'm coming in, I'm saying plus 8, plus 8, plus 8. All right. I know that this is the cost, but I need to add carriage. You add it so that you don't forget it when you are in the flow of the paper. So you add your carriage already. You have it already with you there. Returns, very, very important. I've seen most of you forget to subtract these returns. 30 damage tabs. Immediately once you see the returns, you come and you take them out. So you're saying these are from January. This is January. So you come and say minus 30. That means now here they have 150. Okay, so that one is not there anymore. The supplier reversed the total cost paid, excluding carriage. So I've seen questions whereby they include carriage and where they exclude carriage. In this question, we are going to exclude carriage as it is given over here. Sales and then cost of sales. Okay, let's go. So what I'm going to do here, I'm going to come and say, this is my building block. My building block, as you can see there. How many units is my closing stock? 235. Like that there. My building block. So I want to build 235. And then I do what is called the bottom up. So I start from the bottom, going up. Okay. All right. At the bottom, how many units do we have at the bottom? 150, not 180 anymore, because 30 have been returned. So I have 150. So I build with my 150. I come in and I say 150 over there. And then I say multiply. I've already added this 2. So I have 475 plus 8. That is 483. So I multiply this by 483. Okay. Let's see if the adding machine is close. There you are. So I say 150, multiply that by 483. Like that. And that's going to give me 72,450. 72,450. Like that. Okay. Then I now say I need 235 units, but I only got 150. So for me to get the amount atop there, I simply say 235 minus the 150, and that's going to give me 85. So the 85, remember, started from the bottom and we're going. So I'm now on 330. On the 330, what is their unit price? So it is 468. 468. Okay. Adding machine, and then we say 85 multiply by 468. And that's going to give me 39,780. 39,780. Okay, and then we simply add this 2, and then we end up with 112,230. That becomes the value of closing stock using the first in, first out. That becomes the value of closing stock using the FIFO. All right, so certain calculations need to be done. Number of units missing, stock holding period, stock turnover rate. Okay, don't forget to do those calculations. Remember, internal controls, very, very key. Okay, let me move on to the next activity. Can we do that? Yes, we can do that. Let's go to the next activity. Activity number 8, Eastern Cape Prelim for the year 2023. Lion stores. The business uses the weighted average method. Weighted average method. And then we need to calculate the value of closing stock. We're here now. All right. So when we're using the weighted average, okay, calculate the value of closing stock. And then I'll prefer that we draw a line like that. And then I have my rents over my units. You remember how to calculate cost of sales? How do we do that? Using the periodic opening stock. So I'm going to start with opening stock. How much is my opening stock? 71,040 over there. 71,040. And then the units are how many? 480. 480 at the bottom. Don't leave that calculator. Let's go. So we say opening stock plus purchases. So I come to my purchases. How much is my purchases? 362,500 plus 362,500. How many units were there? 2,000 at the bottom. 2,000, like that. And then I say minus returns. Minus returns. Returns in rents, 6,150. Returns in units, 30 minus 30. What else? Carriage. So I'm going to come and say plus carriage, 20,960. Do you have carriage in units? Certainly not. There is nothing like that. Okay, so we're going to solve this whole thing now. Okay, we're going to add that and add that and add that and add that, and then we add the bottom one. So the top part, if you add your 71,040 plus your 362,500 minus 6,150 and the 20,960, that's going to give you 448,350. And then we divide by 480 plus 2,000 minus 30, that is 2,450. And that is going to give me my average price per unit, which is 183 rands. Then I take that 183 rands, 183, then I multiply that by the number of units at the end, which is 360. Multiply that by 360. Okay, and that is going to give me my 65,880. 65,880. Okay, so that gives me my value of closing stock using the weighted average method. The next one then says calculate your cost of sales. You know how to get cost of sales, isn't it? All right, so for you to get your total sales, you simply had to say that multiply by that to get sales if you're going to calculate your gross profit. But to get your cost of sales, it's very easy. You would simply take this one. Let's quickly do it together. How to get cost of sales. When you are getting cost of sales and you are using the weighted average, it's easy. Simply take your 448,350. Simply take your 448,350 and then subtract your closing stock, your 65,880. That will certainly then give you your cost of sales. To get the gross profit, sales minus your cost of sales. That becomes very easy then. All right, so I wanted to remind you again, when you are doing these calculations, make sure you show all your calculations on your question paper, not in your calculator. On your calculator is to add what is already on your answer book. On your answer book. Calculations must be in the answer book. All right, and then remember, guys, to do your specific identification as well. Specific identification. Due to time, I'm not going to be able to go through specific identification in today's session, but I want to show you how to calculate units missing. How to calculate units missing. All right, so to calculate units missing, I know there's different ways. There's the sentence way, where you say your opening stock plus your purchases minus your returns minus your sales, and then you get that one. But you can also open a quick stock account here in units. A quick stock account in units, where you simply say your opening stock. How much was that? That was your 480. Then you say plus purchases. How much was your purchases? That is your 2,000. We good? And then subtract your returns. How much was your returns? That was your 30. And then you subtract your sales. How much was your sales? That's your 2,050. 2,050. And then you have your closing stock here, and your closing stock is 360. And then you will then get your missing over here. So in other words, you're saying add those two and subtract these three. And then in this case, you get your missing units. Okay, you get your missing units over here. Let's do it together and see how many units we're missing. So you'd say your 480 plus your 2,000 minus your 30 minus your 2,050 minus your 360. That'll give you 40 units are missing. Internal control measures. Don't just jump to cameras or division of duties. Please give good answers. If there's units that are missing, you have to know from where are they missing. Is it the shop floor? Is it the storeroom? Is it during the delivery? And then your internal control measures must apply to the problem that is at hand. If the units are missing from the warehouse or from the storeroom, then your internal control measures must apply to internal control measures that have to do with the storeroom. Limit access to the storeroom. Such answers. But if they're being stolen from the shop floor, then you need to bring other items such as attaching detectors on your products, and then you have those sensors and detectors by the exit doors. Please study through those activities. If it's items such as your cell phones, you can say have one on display and keep the rest in the storeroom. If it's items such as bicycles, put them or put a chain around them. Such internal control measures. Don't just jump into division of duties. Don't just jump into putting cameras. Those answers may not get you any mark. So please, when you get into the internal control of missing units or stolen units, please make sure that you give credible answers. Then the next one is, how long in days will it take to sell the closing stock? So this question, I've seen it being tested in different ways. Okay, so they can say how long will it take to sell the closing stock, or they can say calculate the stock holding period using closing stock. Did you get me? Can I say it again? Okay, so it's one question that they come and say, how long in days will it take to sell the closing stock? Or they can say, calculate the stock holding period using the closing stock. So it's one calculation. But if we're calculating how long in days it would take to sell the closing stock, we are aware that this year we have sold 2,050 units. That is what we've sold in this year. How many days are in the year? 365 days. So it took us 365 days to sell 2,050. How many days is it going to take us to sell 360 units? That's what they're asking. So you simply say what you want, which is 360, over what you have, which is 2,050, and then you multiply that by your 365 days. All right, and then you come to your adding machine, and then you say 360, and then you have your 2,050 here, and then you multiply that by 365 days, and then that is going to take you 64 days. It will take you 64 days. Okay, the question would have been calculate the stock holding period using closing stock, and then you would have done the very same thing again, 64 days. So it's one question which can be asked in two different ways. There are other questions, dear learners, that pertain to your inventory which I have not touched. Please go through them. Okay, remember there are financial indicators that can be calculated as I was doing just now. Please take time, go through your inventory valuation methods, but remember they can also be integrated with your cost accounting. But if it's not integrated, then it might stand out alone, and then you must be able to answer it very well. So okay, so on inventory, remember, we normally find it in paper one, where you have your weighted average or a FIFO in paper one. But in this previous paper one, it was not there. So please make sure that you prepare your FIFO, your weighted average, as well as your specific identification method. Okay, so please do that. And then problem solving. On problem solving, you must prepare your problem solving on inventory. All right, units missing, units stolen, units that are expiring in the factory, okay, units that were ordered but were not delivered, or an employee who has ordered units but yet they were not delivered to our company. Such internal control questions, please expose yourself to such. There's also problem solving questions to tangible assets. Okay, I know you did depreciation calculation in paper one, but when we look at tangible assets, you may get a problem solving question. All right, so expose yourself to such questions, such as a vehicle that is now too expensive to maintain, or a computer that is now too slow. What can we do? Problem solving. All right, so it is very important that you prepare problem solving on your tangible assets. Maybe the vehicle is now consuming too much petrol, or we are spending too much in repairing it. That is problem solving questions that you need to prepare on. In cost accounting, you also need to prepare problem solving. Remember, whereby maybe there's wastage of material. We're supposed to use this particular amount of material, but we're using so much. Or it can be on direct labor cost, whereby our direct labor cost is exorbitant, or factory overheads for that matter. So you need to prepare your problem solving questions. Internal controls. Okay, then once there's a problem, we must have internal controls for inventory, for tangible assets, cost accounting, and remember your reconciliations. Bank, cash, debtors, how to manage our debtors, creditors, how to manage our creditors so that we are not charged interest on overdue accounts. All these internal controls, please remember to prepare them. And then you must be able to analyze figures on inventory, on tangible assets, cost accounting, as well as budgets. It's very important that you read information and analyze it properly. When you comment on your budgets tomorrow, please remember to quote related figures or relevant figures, such as your sales is related to advertising and delivery cost. I did touch on that one. And percentage increase in salaries or for general employees, you compare it to the managers, as well as the inflation rate, whether employees should be happy with a 3% increase when the managers are getting a 20% increase. Comparison. Remember, I spoke about comparison. Comparison will give you a clearer picture whether the employees must be happy or not. And then, before I say goodbye, I cannot finish without touching value-added tax. So remember your VAT, okay? Your output VAT and your input VAT, output VAT, all right? So remember, we follow the goods. Once we sell goods, output VAT. Once we purchase goods, then it is your input VAT, okay? You check for the direction of goods. Sales, output VAT. Purchases, input VAT. And then please expose yourself to calculations. And if you're able to calculate VAT payable, VAT receivable. And I've seen in other papers where the VAT may not be separate, but a transaction can be thrown into one of the topics, your cost accounting, your inventory, or it can be standalone. So just be ready and prepared for that. Or it can even be in reconciliations. Okay. We have come to the end of today's session. It was a lengthy one, a very long one. It has been a long year indeed. And I want to thank you. There are some people who have joined my class right from the beginning. From January, you have been here, and today you are still here. I want to say thank you. And that dedication will be rewarded tomorrow. I know for certain that you've put in the requisite hours. You have put in your sweat, your sleepless nights. That will definitely be rewarded tomorrow. Make sure you get an early night tonight. Make sure all your preparation is done. Your calculator, the battery is on. Remember, you take a calculator that you are familiar with. And tomorrow, arrive in time at the exam venue, and then make sure that you read the question paper nicely from the instructions until the very last page. And when the time starts, you begin to answer all calculations in the answer book. Dear learners, thank you so much. It has been warm having you in my class. It has been a beautiful year, and I really did enjoy having you in my class. I hope that we're going to meet soon, and I wish you all the best for tomorrow. And I want to say thank you to all the educators that have been supporting our kids, that have been sitting in our classes. I know right now there are certain schools that are in school and they're watching this lesson from their school, and the kids are sitting there. I just want to say thank you, and we salute you as educators. Thank you so much. If it wasn't for you teachers, we wouldn't be where we are today. But for you guys, tomorrow is the day to show that we're prepared and we are ready to shine and to fly high. Until next time, I wish you all the best for tomorrow. I just want to say thank you to the guys who work on these PowerPoints. There are so many people who work behind the scenes that you don't get to see, but they have put so much work in this preparation. I just want to thank them so much. I want to give special mention to Beauty Mpanza. Thank you so much for your support and the work that you have been doing throughout the year. Until next time, I wish you all the best. It is goodbye. Good luck for tomorrow.